Welcome to our tax and accounting channel. Today we are going to talk about bankruptcy and taxes. This is one of the programs of last resort that taxpayers turn to when they are having debts, including taxes. It's a complicated area, but it's important and it should be considered as one of the alternatives when a taxpayer is not able to afford to pay a tax bill. My name is Gary Massey. I am a CPA and the owner of a tax and accounting firm focused on the needs of small businesses and business owners. I help taxpayers to save taxes and to stay out of IRS trouble. Very briefly, there are three types of bankruptcy. There is a Chapter 7, which is when an individual or a business seeks to discharge their debts. A Chapter 13 bankruptcy is a plan of reorganization for individuals who need to restructure their debts to pay back creditors. And then a Chapter 11 is similar to a Chapter 13, but it is a plan of reorganization for businesses that have debts that they can't pay. So that's all we're going to talk about bankruptcy itself. The subject of this video is how bankruptcy relates to income taxes and other types of taxes. So generally, taxes are not dischargeable in bankruptcy. However, there are some very important exceptions to that rule that need to be considered when an individual or a business is going into bankruptcy. If you meet these exceptions, you are able to discharge your taxes in bankruptcy. So that's what we're going to discuss now. What are the exceptions that allow you to discharge a tax in a bankruptcy proceedings? You have to be able to meet the exceptions that I'm about to outline. The first exception is that a substitute for return is not allowed. A substitute for return, what we call an SFR, is prepared by the IRS when a tax return is missing and the taxpayer is uncooperative about preparing a tax return. If there is tax owed relating to a substitute for return prepared by the IRS, that tax will not be discharged in bankruptcy. So that is the first rule. The second rule is that trust taxes are not dischargeable in bankruptcy. A trust tax is a tax that you collect and hold in trust for the government. And the most common example are payroll taxes and sales taxes. So those taxes are not dischargeable in bankruptcy. However, if it is not that kind of a tax, such as an income tax, then that would be dischargeable in bankruptcy. The next rule is that fraud is not allowed, either civil or criminal. In other words, if there is a question of your taxes being fraudulent, that will not be discharged in bankruptcy. However, if that is not the case, then you meet that rule, you pass that test, and you can go on to the next test. There are three more rules that I want to mention about taxes in bankruptcy, and they all relate to time. These I call the old and cold rules. Your taxes need to be old and cold in order to be discharged in bankruptcy, and here are the three rules. Rule number 1, the tax return must have been due at least 3 years ago to be dischargeable in bankruptcy. And I'm going to give you examples of these three rules. Rule number 2, if the tax return was filed late, that tax return must be on file with the IRS for at least 2 years to be discharged in bankruptcy. And then rule number 3, if there has been an additional tax assessed by the IRS, either relating to an amended return or an audit by the IRS, in that case, the additional tax assessment will be discharged in bankruptcy if the original tax was dischargeable in bankruptcy based on the rules that we just discussed. And then the second part of that third rule is that you must wait at least 240 days, about 8 months, after the additional tax was assessed before that additional tax can be discharged in bankruptcy. So all that sounds fairly complicated, and it is, but I'm going to give you some examples that illustrate these three tests relating to timing. So the first example is an example of the 3-year rule. Let's say that you have a tax return relating to the year 2016, and it was due and filed with extensions by October of 2017. So the 3-year rule means that you have to be past October of 2020 in order to have that tax discharged in bankruptcy. Before October 2020, it is not dischargeable. After October 2020, it is dischargeable. Now, here's an example of the 2-year rule that I mentioned before. Let's say you have a 2014 tax return that was due in 2015. However, it was filed late. It wasn't filed for 2 years until 2017. So even if you have passed the 3-year test that we said before, which would be 3 years after it was due, which would be from 2015 to 2018. Let's say you've passed that. You still have the 2-year rule for late filed returns. So 2 years after when it was actually filed would be from 2017 to 2019. So after that date, it is dischargeable. Before that date, it's not dischargeable. Finally, we're going to talk about the 240-day rule relating to amended returns and IRS audits. So let's say, for example, that there was an IRS audit of a return and the IRS assessed taxes on July 16th, 2020, which happens to be the date that I'm recording this video. So let's say there was an audit July 16th, 2020. You have to wait 240 days, approximately 8 months, before that tax can be discharged. And 240 days after July 16th, 2020 is March 13th of 2021. So you have to wait until that date before that additional assessed tax can be discharged in bankruptcy. Now, all of this is complicated. This is one of the more complicated videos that I have presented to you. However, what we do in our firm is we work with bankruptcy attorneys and with clients to analyze their tax transcript to determine which taxes will be discharged in bankruptcy. If you are dealing with a bankruptcy attorney, which I strongly urge that you do when you have bankruptcy issues, make sure that you work with an attorney who is familiar with the tax rules relating to bankruptcy and how to calculate which taxes are going to be discharged and which will not. If that attorney is not comfortable or if you need to speak with us, please let us know, because we deal with that all the time, determining which taxes are going to be discharged and which are not in a bankruptcy situation. And it's very important that you know that before you begin a bankruptcy proceeding. I hope you have found this topic to be useful. If so, please give it a thumbs up. We appreciate that, and it keeps the videos coming. In addition, we ask you to subscribe to our channel if you have enjoyed this video, and you will be notified when additional videos have been posted. And also, if you have any questions about taxes and bankruptcy or anything else, feel free to leave them in the comments below. If you have a more individualized question that you would like to ask me, you are welcome to send me an email or go to our website, and there's a Contact Us page that you are welcome to use as well, in addition to the email. And you can also call my office, ask to speak with me personally, and I will do my very best to help you in your situation. So for now, I wish you all the best, and I look forward to seeing you next time.